The Fair Tax Act. The truth about the biggest tax overhaul in U.S. history. Did you know that you're likely spending more than a third of your paycheck on taxes before you even buy groceries or pay rent? What if I told you the federal government wants to change everything about how taxes are collected? The Fair Tax Act is a bold plan to eliminate income taxes, payroll taxes, corporate taxes, and even the IRS itself. Instead, you'd only pay taxes when you spend money. A 23% sales tax on nearly everything you buy. But here's the real question. Would this make life easier for you, or would it shift the burden onto the people who can least afford it? Today, we're uncovering the facts about the Fair Tax Act, how it works, who it benefits, and how it will impact you. Stick around, because this could completely change the way you think about taxes. The Fair Tax Act, in context. The Fair Tax Act, also known as H.R. 25, was introduced by Congressman Buddy Carter. Its goal is ambitious: replace the entire federal tax system with a single national sales tax. No more income taxes, no more payroll taxes, and no more corporate taxes. But before we dive into how it works, let's look at what the current tax system costs you. Right now, the federal government collects over $4 trillion annually in taxes. Here's the breakdown. Individual income taxes make up about $2.1 trillion, or 50% of all federal revenue. Payroll taxes, those deductions for Social Security and Medicare, account for $1.4 trillion, or 35%. Corporate taxes bring in around $400 billion, or about 10% of total revenue. These taxes fund everything from Social Security to defense spending. But for the average American, it adds up to a significant burden. If you earn $50,000 a year, you might pay $6,500 in federal income taxes, $3,825 in payroll taxes. That's over $10,000 gone before you even see your paycheck. What is the Fair Tax Act? The Fair Tax Act aims to replace this entire system with a 23% sales tax on new goods and services. Here's how it works. 1. All federal income, payroll, corporate, and estate taxes are eliminated. 2. A flat 23% national sales tax is applied to all new goods and services purchased in the United States. 3. Every household receives a monthly rebate, called a prebate, to offset taxes on essential spending. For example, if you buy a $100 item, you'll pay $23 in taxes, making the total $123. The prebate is meant to cover the taxes on basic necessities, ensuring that everyone pays the same rate on what they buy, but no one is taxed on the money they need to survive. At first glance, this system seems straightforward. But the real question is, how does it affect you? To understand, let's break it down for different groups: low-income households, middle-income families, and the wealthy. How it affects different income levels. Low-income families. Let's start with low-income families. Under the current system, Maria earns $25,000 a year and pays little to no federal income tax. However, she loses around $2,000 annually to payroll taxes. Under the Fair Tax Act, those payroll taxes disappear, and Maria keeps her full paycheck. But Maria's cost of living changes. A $200 weekly grocery bill now costs $246 with the 23% sales tax. Over a year, she'll pay an additional $2,400 in taxes on essential purchases. The monthly prebate of around $300 offsets some of these costs, but unexpected expenses, like a $1,000 car repair, would now cost $1,230, leaving Maria with less flexibility in her budget. Middle-income families. Next, let's examine middle-income families. John and Lisa earn $80,000 a year combined. Under the current system, they pay about $12,000 in federal income and payroll taxes, leaving them with $68,000 in take-home pay. Under the Fair Tax Act, they keep their entire $80,000. But here's the catch. A $30,000 car now costs $36,900 with the sales tax. Their $1,500 monthly rent becomes $1,845. Even everyday purchases, like a $100 night out, now cost $123. While the prebate helps offset some of these costs, middle-income families could feel the pinch when it comes to big-ticket items. High-income earners. Finally, high-income earners. Emily, a tech CEO earning $1 million annually, currently pays around $370,000 in federal income taxes. Under the Fair Tax Act, she keeps her full income and only pays taxes when she spends. If Emily spends $500,000 in a year, she'll pay $115,000 in taxes, far less than what she currently pays. And if she chooses to save or invest her money, she pays no taxes on it at all. This shift makes the Fair Tax Act especially beneficial for wealthy individuals, who can control when and how much they pay in taxes. Broader economic implications. The Fair Tax Act doesn't just affect individuals. It has broader implications for the U.S. economy. Small businesses would be responsible for collecting and reporting the 23% sales tax. This could add administrative burdens and lead to reduced customer spending as prices rise. For example, a $5 coffee now costs $6.15, a noticeable increase for customers. Housing and healthcare are also impacted. A $300,000 home would now include $69,000 in taxes, making home ownership more expensive. Similarly, a $10,000 surgery would now cost $12,300, increasing out-of-pocket costs for patients. Who benefits the most? While the Fair Tax Act simplifies the tax system, its benefits are unevenly distributed. Low- and middle-income households may see higher costs for essential goods and services, even with the prebate. High-income earners, on the other hand, stand to gain the most by avoiding taxes on savings and investments. Conclusion. The Fair Tax Act's big questions. The Fair Tax Act is a revolutionary idea. Eliminate income taxes and replace them with a single sales tax. While it simplifies the system and promotes transparency, it also shifts the tax burden toward consumers, raising questions about fairness and affordability. So, is the Fair Tax Act a step toward fairness, or does it leave too many Americans behind? That's for you to decide. Let us know your thoughts in the comments, and don't forget to like, subscribe, and share this video to help others understand the facts.